Hi, so you might be wondering who I am to actually talk to you about investing today, but I am not Warren Buffett, as you can probably see. I don't look like Warren Buffett, and I probably haven't earned as much money as he has. But today's conversation really isn't about being a Warren Buffett so that I can tell you what to do, but it's to help you to learn from some of the mistakes that I've made as a beginning investor so that you can learn. So I just want to say very honestly, firstly, that I have lost $3,036 over the course of my investing career. I started investing since September 2016, primarily in stocks and equities, and since then, you can see very clearly from this particular report card that for currently managing about $56,000 in securities, but over the past 4 years, the returns have been a loss of $3,036. That's approximately a 5.6% loss. So you might be thinking, why learn from me? So here's the first reason, because many times we see many gurus out there and they talk a lot about the wins that they have, but they don't talk about the losses that they have made. This is a mistake because every single investor will make mistakes. Every single investor makes mistakes. And if someone tells you that they have a guaranteed win strategy, you better be careful of them. And secondly, it's also so that I can help you to learn the three most important things that for me have helped. The first lesson is to learn to lose. To learn to lose. In Lee Freeman Shaw's book, The Art of Execution, he studied 1,866 investments representing about 30,000 different trades by 45 of the world's greatest investors under his firm Old Mutual Fund. And he found that 49% of investments only made money. This is very important. Only 49% of the investments made money. And of the greatest investors, he found that only 30% of their decisions actually made money. What he found was actually very interesting. You can see from this particular table here, a 10% loss would require an 11% gain to break even, and you can probably see that the number actually grows for as you lose more, and so the principle that this author wanted to show was that the best investors he found was those that were able to make a significant adjustment or material adaptation after they had lost. So for example, as you can see from here, after a 20 to 33% drop, they had two decisions. They either could cut their losses or they chose to add to them. And it was not what happened before the trade in the lead up, but what happened after that determined the results and success of the world's greatest investors. It was what they did after the investment rather than before. This is very important for you as a beginning investor, and it's probably been the most important lesson for me. Here's a example from my own investment journey. In October 2018, I bought this stock called Sino Grandness, which was selling juices in China. You can see very quickly here that the share price then at October 2018 was about 19 cents, 19 Singapore cents per share. And you can see a bit more clearly here, after that in May 2020, things started turning really bad. You can see from January 2019 that was actually when things really started falling. But I kept telling myself that I will wait and see. Very often the impetus to do nothing is greater than the impetus to cut our losses. Because it's very easy as an investor to think, especially when you are beginning, that I haven't made a mistake here, and you try to prove yourself right. This is a thinking fallacy that many of us have, the urge to have this confirmation bias, and we search for the things that help us to prove ourselves right. As investors, the most important lesson you have to learn is to live to invest another day rather than live to prove yourself right. And at May 2020, after suffering a 90% drop and about $3,000 loss, I finally sold it. And so what the most important question for me at that time was, knowing what I do now, would I still buy this? And that is actually one of the most important lessons that you can actually learn as an investor. Knowing what I do now, would I still buy this? Knowing what I do now, would I still buy this? The second important lesson is to learn to learn. In investing, all of us need to learn this particular model of build, measure, and learn. Many times as an investor, you might not feel ready to start investing, but we only learn by doing rather than learning by stimulation or simulating trades or just playing with computer numbers. We learn by putting our skin in the game and from the mistakes. One of the most practical strategies you can implement is to keep an investment diary. In it, write down every single trade that you make and why you have made it and what you expect to happen. This helps you to re-examine it in 6 to 9 months to actually determine whether your thesis has been correct and whether there needs to be certain adjustments to your investment strategy. The last lesson is to learn to do nothing. In today's hyper-connected world, I see many investors who are able to tell me the day-to-day stock prices of each company that they own. But knowing the short-term churns of the stock market doesn't actually determine your understanding of the long-term changes of the business. And you know that over time, it is the long-term changes that will determine your greatest return. And as Warren Buffett, the world's leading investor, says, our favorite holding period is actually forever. Our favorite holding period is forever. In investment, there is an action bias. We think that by doing more, we will actually earn more. But that's not necessarily true. Over time, your trading costs will add up. And one thing that has been helpful for me in preventing this action bias is to use the time whenever I'm impatient to do something to learn. So in the show notes and later in the blog article that comes out, you'll see a series of resources that I found most useful for my own investment journey. In conclusion, these 3 principles, learning to quit or learning to lose, learning to do nothing, and learning to learn, are the 3 most important for you today as a beginning investor. But more importantly, it's also asking yourself why you are actually investing. Why are you investing? If it's simply to make money, there are ways that you can make it without going through so many emotional churns. But if you look at investing as a way to build a better world through the companies that you buy into, to build a more sustainable world, then I believe that investing is not actually that bad a choice. So today, don't simply invest to earn more money. Invest to build a better world, not only for yourself, but also for future generations. Thank you, and I hope you enjoyed it. Let me know what was the greatest takeaway for you in the comments below.